the London Open. This is the 10-year notes that we're trading off of these narratives, okay? 10-year notes. And I'll go back to 7 o'clock because treasuries, as a rule, start kicking off about 7 o'clock in the morning. First thing we see on treasuries is this narrative here. We've got a bond lower narrative. And the idea here is we're looking for offers here. So we've got basically a market that has a bid and an offer through the bottom edges at 7 o'clock. That's okay. 7 o'clock, a bid and an offer. So at 7 o'clock, here's 7 o'clock here. We can see, where is 7 o'clock? 7 o'clock is here. We've got a bid and an offer into that area. So we've got a bid down here, and we've got an offer up here at this stage, right? So we've got bids and offers available for us to trade into. So that's already visible from the initial trade log at 7 o'clock. Now, if we go back a wee bit further, you'll start to recognize here, for example, at 6:47 and 6:49, you can see that the bond traders are bidding dips at the moment, 6:49, 6:47s, those kind of trades. So just before that market opens, you can see that 6:47, 6:49s, you can see there's 6:46s there. You can start looking at that and saying, well, that makes a lot of sense. You were saying, but that was after the drop was already in. Okay, so we'll go a little bit further back to 6:34, and you'll see at 6:34, we're now looking for bond traders to buy the drop at 6:34. So does that help you in terms of finding this buy trade here? Sure, 6:34 was this level here, and obviously the price then drives into this through to 6:37. So 3 minutes later, we're now bidding the low price. And that's obviously a cracking trade because obviously that was basically the low of the day into that price level here. So a very, very nice trade. Very nice trade. So we hit 8 o'clock, and obviously when we hit 8 o'clock, we know that the London Open is going to bring in a lot of information with regard to bond traders. So when we look at 8 o'clock, take a look at what we're seeing in the trade log. 7:59, so just before the London market opens, the bonds are now rich to the Fed. Expect trade will drive higher. Initially, watch for offers. 7:59. So what happened? The price drove higher for offers, didn't it? So we got exactly what we were looking to get. We got the price driving higher into that liquidity pool for those offers. Unbelievable. Bonds rich to the Fed, expect trade to still come in on the sell side. Watch for offers, 8:04. So you can see it's basically the same trade. It's not, I'm not going to change the location of the trade. It's just exactly the same trade. Watch for offers. And the only reason that we keep adding in other elements is because we like to know how many offers are coming in from various different trade entities. Oil, bonds, equities, stirs traders. Bid on the drop, 8:44 now, 8:44 guys, 8:44, there's 8:44 there, bid on the drop, see where the drop is, see that little pool of liquidity? We've just told you to bid on the drop, there's your bid opportunity on the drop right there. You might say, what time is that? 8:45. So a minute after the trade log comes in for a bid on the drop, the buy appears. Gives us a brilliant little buy reversal, bearing in mind this 10-year notes. Obviously, get rid of the spike and we'll see a little bit more detail in this area. So there's the bid on the drop right there, 8:44, 8:45, right? There's the candle, 8:45. Perfect. Perfect. Plus, we had that ledge, so we can use that as a liquidity pool, can't we? 8:45, bidding on dips. That's just the bid on dips that we've got there, right? So that's all good. Knob spread commercial sellers, the price should press higher, so that's something we should recognize about the knob spread, but we're not looking at trading the knob spread here, we're looking purely at the bond trades. Stirs traders, bid on the dip, 8:54. So if we come into 8:54, we can see that this is 8:54 here, isn't it? There's the 8:54 narrative there. Now, we didn't get the bid on the dip this time, but we still acknowledge that it's there. We still acknowledge that there's another buyer on the dip, so if it did happen, we would be ready to take advantage of the bid on the dip. The fight. So this is the first time we've had a fight trade coming in. The fight is cheap on the curve. Watch for bonds testing new highs. Offer watch at 9:10. Offer watch at 9:10. So there's 7 minutes, 8 minutes, 9 minutes, 10 minutes past 9. So the offer watch came in at the high price. Now, obviously, it was just after that price came in, so we never got a trade off. But you can see that the price did jam in here, and it didn't go any higher for quite some time. 9:15, same thing. 9:15, same thing. So we're still getting another offer watch on the fight. So we just put it in the charts just to remind ourselves that we're still getting that same offer watch. Star traders bidding the dip, 9:30 now. So 9:30, we're bidding the dip. So 9:23, there's 9:30, we're bidding the dip. And again, the bid could be moved up potentially. We could obviously move that bid into that area there. It's not ideal. It's not the biggest liquidity, but we're talking about the 10-year Treasury notes here. It's still liquidity, and there's an opportunity maybe to bid the dip. And we refer this obviously to things like our ultra bond, because if we trade this on the 10, we would be looking to do the same trade as a lag on the ultra bond of the ZB contract. 9:30. Stars traders bid on the drop at 9:45. Same trade, right? Same trade. So we'll just bring in the bids again and we'll bring it down again there. We'll put an extra bid in there. 9:45. UB bonds are cheap against the Fed. So in other words, there's a bit of a curve change taking place here. Watch for bids at 9:50. So that's a knobs, that's more of a back end trade. But again, we can just put in another bid at the back end of the curve here and see how it plays out. 9:50. And then we see this idea here again at 10 o'clock where we've got a bid offer spread coming in. We've got offers above the market and bids below the market. So we'll disregard that one for the time being. Lots of treasury spreads coming in here, or outright treasuries, some big block trades coming in here. You can see some 10-year trades get put through the books there, quite interestingly enough, at 14.31. But obviously a different contract, of course, going out a little bit of time on these. So let's see what else we see coming in. Bonds, cheap to the Fed, bid on the dip, 10.05. 10.05 is right there. Bid on the dip, so it's the same trade, same price. And again, we just acknowledge that there's another bid coming in on the dip into this trade area. So that's now at this point here at 10.05. Stars traders bid on the drop at 10.19. 10.19, we're now at this point in the charts here. There's 10.19 there. It's another bid on the drop again, isn't it? So we see that we're still bidding the dip. You see what's starting to happen in here? Is there anybody starting to sense that perhaps we should be buying bonds? Perhaps we should be buying bonds. Is that maybe starting to catch your eye? Perhaps. But did you notice this? Did you see it? Are you paying attention to it when it's happening? Knob program, we're going to avoid the knob programs trade at the moment. These guys are expecting this to press higher, of course, on bonds, so that's okay. Bid on the drip again. Bid on the drip at 10.44. And there's nothing better than bidding the drip, guys, at 10.44. So we go again. I'm running out of room to put these bids on the charts without getting ridiculous. So there's the next 10.44 trade in there. So we're still bidding the dips. And you can see that this becomes a crazy, crazy, crazy trade at that point. Stars traders bid on the drop, 10, 11.15 now. 11.15, my God, are they going to give up at any stage? 11.15. So there's 11.15 in there. You can see it's now caused this little fractal. So I'll bring these bids up into the price at this stage. It's caused that little fractal to take place, hasn't it, right there? 11.15, see it? 11.15, bid the drop. So we would obviously initially have been down here, but when it forms there, we bring it up. So we wouldn't have got that trade on unless we got a lower price on the ultra. But we're obviously looking at 10s here. Move on. Bonds is starting to get rich to the Fed, okay? Bonds is starting to get rich to the Fed at 11.55 and 12 o'clock. Interesting. And then we get bonds higher in here, 12 o'clock. So we're now looking at 12 o'clock and saying, you know what, 12 o'clock, it's time to start thinking about some offers. And we had 4 of them in a row there at 12 noon. 4 of them in a row at 12 noon. There's 12 noon right there. 4 of them in a row, offering at the same time. 1.
Looking to the US cash equity open, the S&P opens almost unchanged.
3.
And the Nasdaq opens up
4. 4 offers. What happened? The price came off those offers beautifully, didn't they? Price came off those offers beautifully. Watch for offers. Sturs traders expect rates to fall. Bid on the drop at 12.25. 12.25. Let's find 12.25. There's 12.25 there. So this is going to be our bid price here now, isn't it? 12.25, and you can see at 12.28, you might have had a chance to buy into that price. You might have had a little chance. You maybe got a little opportunity to deal. Let's see what happens next. Sturs traders bidding the drop at 12.55. 12.55. Well, there's 12.55 coming in here, right? So there's 12.55 coming in here. So we're still bidding the drop. So we pop that drop into the price level there as well. So there's the bid there for the term traders. Now, I'm going to shorten this line because obviously we've now taken in a data release. And obviously the trade log doesn't trade data releases. It just trades the short-term swing values. Bid on the drop at 1300 hours. Bid on the drop at 1300 hours. So there's 1300 hours. It's exactly that price now. So that's interesting. So we'll just put another bid in there at 1300 hours. Nice. Sturs trader, bid the drop. Bonds are now expected to be manipulated higher at 13.15. So at 13.15, we're now expecting that manipulation higher at that point there. So we're now looking at that at 13.15 and saying, we think this is going to get manipulated higher. And if it does, there might be an opportunity. Well, we're coming into that data release now. So we're going to stop getting involved in this as a trade at this stage. 13.20, just before the release, bid on the drop at 13.20. So there's 13.20 right there. Yeah, there's 13.20 coming onto our charts here. So we're bidding on the drop here, just into the data release. I'll bring a new one along. There we go. So there's bidding on the drop at 13.20 into the data release itself. And that's us. There's no other ones prior to the data release. So when the data release comes out, of course, they're now looking to take the bonds higher at 13.30 to offer into that bond at 13.30. And we can see that on the data release, what happened at 13.30? They took the bonds significantly higher to offer into that data release, didn't they? So that's what your trade log chart looks like at that stage. 1 second. When we see how bonds performed in the run-up to a data release, how do you think they performed? Would you give it a pass or a fail? Would you give the trade log a pass or a fail at that stage? I'm not saying for 1 second that you're going to take these offers and these bids and these offers and these bids. I'm not saying for 1 second that these would be your trades, but we can obviously look at that and say, well, did it give us a better idea about what was happening? Now, we can see, of course, that the 10-year Treasury just goes nowhere. It just sits basically in a balance area and doesn't go anywhere. So it's kind of easy to find buys and sells. But this is also something we've just looked at on gold as well, isn't it? So it's not just about the fact that the 10-year Treasury doesn't go anywhere. It's the fact that it's what is available for us to trade today. It's not as if we're going back 5 years to find good examples. It's today's London morning session. So based on today's London morning session, we can recognize whether this trade is a good trade or a bad trade. You know, and then at 1400 hours, if we catch up with the trade from that point onwards, we can start looking at the other opportunities. Now, there wasn't an awful lot after the data release, but let's take a look anyway. Obviously, the volumes are starting to pour into treasuries now. And again, they're looking to bring the bond price up at 13.45. So if I look at 1345, it's at the very bottom edge. So the idea at that stage is if they're looking to bring the bond higher, we're looking for an offer coming in on bonds. So let's see if we can find an offer coming in bonds from 1345. And if we start looking for that offer coming in bonds, we haven't seen it yet, have we? And then we get bond offer watch at 1415. Do you see it? Bond offer watch at 1415. So now we're looking at 1415 and saying, can we find an offer watch at 1415? So there's 14 coming into play here. I'm sure we had the one at 1400 hours. Okay, we did have one earlier. We've missed it. Sorry, guys, we've missed it. So we had a curve twist here at 1340. See it? We had a curve twist at 1340 for an offer, but then at 1345 we had a buyer buying the drop. So 1340 we had a curve twist for an offer. So let's find 1340. There's 1340 there. So we had an offer curve twisting coming into the curve there. And that was an offer at that point, right? So it's right there. Now, obviously, we would have expected to try and then sell that at this price. So that never happened. That's okay. But then look at what happened next. At 1345, the STRS traders are now expecting rates to start falling. And there's going to be a strong drive lower on bonds. And we should bid into the drop at significant lows. 1345. Let's see if we can spot that at 1345. Anybody spot it? Well, what's that trade at 1345, 1346? Is that not exactly the right trade right there? Is that not it? And did we just therefore bottom tick the bond market? Did we just bottom tick the day bond market right there? I think we did. I think we just bottom ticked the bonds. Now, that's kind of impressive as well, isn't it, when you think about it? How many other people bottom ticked the bond market? So let's take a look at when that trade finished up. So we can see that at 1345, we'll make sure we haven't missed anything. There's the bond traders bidding on the drop at 1345. We're looking for the market to be manipulated higher than the prior high. So that's good news. That's good news. No other bond trades coming in, no other bond trades coming in, no other bond trades coming in, no other bond trades coming in. Now we've got a bond trade coming in. Offer watch at 1415. Offer watch at 1415. Okay, so let's do offer watch at 1415. Let's see if we can spot it. 1415 is right there. So we've got an offer watch. Now, that would mean the top edge, right? So we don't get the top edge at 1415. So there's no trade opportunity, is there? There's not a chance for me to deal there unless it's on the Ultra Bond or the ZB contract. And unless that's happening, we never get filled on the offer. Okay, so we never get filled on the offer. So what's the next trade that came in? Bid on the drop at 1420. So let's put a bid on the drop at 1420. So can we find the drop at 1420? 1418, 1419, there's 1420 right there. It turned out to be the bottom tick price of that move, didn't it? Do you agree? Turned out to be the bottom tick price of that move at 1420. And what happened to bonds? Yeah, they went back up again. Interestingly enough, they went back up again. Let's see what happens next. We then get a bond offer watch at 1430. We've obviously got the idea that they're going to try and charge the price down at 1430 because they're going to try and manipulate the price lower in this phase, and we'll look for those bids if it happens. So at 1430, can we all agree that we've got an offer watch? Let's find that offer watch. 1430, so there's 1428, 29. So 1430, where is the 1430 offer watch? Well, we could argue that it's at that price. We could argue that it's at that price there. because there is a little ledge there. And obviously the price rose back between those bid and offer spreads. We could argue, of course, that it's at that price because there's a nice ledge there. And we could obviously argue still now at this stage that it's still the prior high price just in here. So we could argue for any of those three levels, and we could be looking in those areas for an offer. We could be looking in those areas for an offer to come in. So we go back to the trade log and we start looking again and we see if we get any other ideas. Nope, no other ideas. That's us up to date from the beginning of the London session to the current present moment on bonds. How did you perform if that was your trades? We'll shorten this bid down because obviously this bid came in before these offers came in here. So that's going to confuse if we don't shorten that bid down a little bit here into that little space there. But how did it perform from the London Open? How did we get to where we got to based on our bid offer watch trade narrative? Are we happy with that? Do we think it was good? Do we think it's not very accurate? Do we think it leaves a lot to the imagination? Or did you see exactly where each of these trades was getting put into lines and where each of these lines could have turned out to be trade ideas? And we would start looking for those trade ideas, of course, tying them in with the tape changing, tying them in with the narrative in the background evolving, and tying them in with the narrative in its entirety, the value narrative, the institutional smart money buying or selling narrative. So when we think about it from a buy side or a sell side trade log entry versus, for example, smart money, well, take a look at what happened at the bottom edge on the 10-year treasuries at 1330 for the data release. What was the smart money doing at 1330 on the data release? Were they buyers or sellers? Buyers, right? So if the smart money were buyers, any offer that we see on the trade log would not have been traded. Any bids we saw on the trade log at this stage would have been traded. And we can see that that took place probably from this point here, which was 1:05. So from 1:05, any buy trade that we see on the trade log would have been traded, which would have meant, of course, that this trade here would have been traded and this trade here would have been traded, yes or no? So these are two validated trade log entries based on smart money buyers and the trade log information. How many of these offers get validated? Not very many of them, if any, until this drop came in here at 1430. So when the drop came in here at 1430, now we can validate the trades, right? We can validate an offer at 1430 at that point, because up to that point, I still quite like the idea of this bid here, right? Oh, surprisingly, so did the trade log like the idea of the bid there at that stage as well, right? The trade log liked the bids at that point. So we can validate that bid coming in from the smart money into that trade area there, can't we? And then from 1430, we can see that this drops out to the sell side, which means that the only offer that's validated is effectively this one that runs up into that top edge here, right? So that offer there is validated by the smart money. So if that's the offer that's validated by the smart money, we can then look to try and get a little bit of short selling. So from the US session, from the US cash open at 1:20 London time, can we agree that that's what you would have had on the trade log as trade entries? There's the US cash open coming in right there. Would you agree that that would be your 4 trades based on the validation of the trade log with the smart money trading? That's it. That's the only 4 trades you would have taken. And the answer, of course, must be yes, because we just looked at it. Unless anybody's got a complaint about one of the lines that I drew in, about one of the levels that I used. But I just looked to the left and found the last level. All I did was look to the left and see, right, there's a level there. So I'm going to draw in a level against that little node. I'm going to draw in a level against that node, and I'm going to draw in a level against that node. Well, I'm going to draw in this level against that node, and I'm going to draw in that level against that node there, right? I'm just drawing in levels from the left-hand side of the chart. Every commercial trade trades toward liquidity, and that's where we find the opportunity to maybe buy or sell into these. 4 trades on the 10-year Treasury notes, all of them accurate to 1 tick since the US Open, accurate to a single tick on the 10-year Treasury. Now, if that's not good, I don't know what is. And again, it's that idea of just giving you that information to make sure your charts are up to date with informed buyers or sellers showing up, and then looking to see if you can verify them for yourself that they're there, ready to do business, and then execute against those bids and offers coming in. Now, some might say, but I don't know where the bid is going to come in. Well, that's exactly my point. You look for it from other elements. A Voltic coming in, a smart money buyer coming in, a stack on the limit order book starting to show up, and we try and find the trade. We don't just buy and sell because it says we've got a bid watch on the trade log. That's not a buy or a sell, remember. We don't just get a buy trade, for example, in a random area and we just pop a buy in. We look for a liquidity to the left-hand side, because every trade we take should be trading into a liquidity level. And from that liquidity level, we look to then take the deal. So obviously, when we pop this offer price here, we can recognize by popping that offer price there that we've managed to get a big chunk of liquidity there. And if you look at the volume, I know it's not massive, but you can see that the volume poured in the trade at that point. You see it? So that was the sell trade that we were seeing, was that liquidity. And the buy trade that we saw was this buy trade liquidity here, wasn't it? So the volume is an incredibly important part of this trade narrative on any trade log we look at, because the idea is they're always asking for that volume. So when we see the volume coming in, guess what happened in this candle? Big spike in volume. Big spike in volume, right? Tied in beautifully with the test into that liquidity level there. Bidders coming in and rolling the price beautifully. Remember, this is the 10-year Treasury notes. So it shouldn't be concerning about the fact that it's not a lot of ticks. You know, when you look at that trade there on the Ultra Bond at 13.45 and you try and equate just how much money that trade made, it was 127.18s on the Ultra Bond to a high price of about 128.04. So it's over $500 profit per contract on the Ultra Bond based on that buy trigger there from the trade log. Over $500 on that swing. That's a pretty good trade, bearing in mind this is a 1-minute chart. Unbelievable. Well, I think it's unbelievable. It's obviously one of the things that perhaps a lot of people don't like, and I don't get it. I don't understand it. I think it's the best information you will ever find in the marketplace. And, you know, it's about anything else. It's about how you use the information. It's about recognizing that it is just information. It's not a trade. It's about the idea that there will be a commercial if we achieve the liquidity in question. So when we achieve the liquidity in question here, and it runs out a little bit light, but we still get the big volume, and it confirms with a big surge in Voltics. Take a look at that 13.45, by the way, just on a commercial trade log basis. If you were looking at it from an activity arrival rate, take a look at the arrival rate on the Ultra Bond. Do you see the arrival rate in the Ultra Bond here? See anything unusual about it? Voltics everywhere, right? It's just the traffic lights go nuts again. So we see all those Voltics kicking off big style here. And if on the Ultra Bond you see those Voltics kicking off, you're now looking at that in light of the fact that we had that trade log entry available to trade into. That's where it's really a little bit special. Because now we're getting that confidence that there's a big commercial sitting here waiting to buy up loads of treasuries. And it might not be all 10s, it might be some 30s, it might be some ultras, it might be some 5s. But it's a treasury trade unless it says specifically the knob spread. It's going to be a treasury trade. And off she goes with an absolute ripper to the upside. If you don't like it, you don't like it. It's as simple as that. But, you know, I don't think there is anything in the market that is comparable. I really don't think there's anything in the market that's comparable. We've just had a fight offer watch on bonds there at 1450. So you can see obviously an offer watch. It did run a little sweep there. So you might have been able to get a bit of action against it because there was a prior liquidity at 1450. Remember, this candle finishes at 1450. So when we look at that offer watch, you could have had that price, but obviously, you know, looking at that trade there, you may have had it back at this price as well. So there's possibly two trades, and obviously what you're trying to do again is tie in that offer watch against what you see elsewhere in terms of your smart money buying and selling. So this has been the bonds today from the London session open, and you can see how it's changed, can't you? So we got a lot of offers early diddles. We got a lot of bids in this mid phase here. We got a lot of offers up here. We got a sack load of bids coming into the data release. And then since the data release, it's been dominated by sellers, hasn't it? So by keeping your charts up to date, by keeping your charts actively regenerating this information so that it's visible, and this is what we talked about the other day when we talked about having this information, not in hindsight by going backwards to look at it, but in real time, keeping your charts up to date. The feedback you should be getting from that chart update should be incredibly powerful if you keep your charts up to date, because when you draw a line in that says bids, it's almost like across the edge of the pits, you can hear those buyers starting to shout. And the more bids you see into this area, the more buyers are shouting and screaming for that buy trade opportunity. Because that's what we're trying to get you to understand. This one seems a little bit less because it seems as if when the price dips, they bid for it. When the price dips, they bid for it. When the price dips, they bid for it. So it doesn't seem to be as actively pursuing the same price. It seems as if they're happy to let the price sink a little bit further and a little bit further and a little bit further before taking advantage of those low print offers, those low print bids. And then, of course, the buy that comes away from that was borderline sensational. It's up to you if you want to use it. It's up to you if you decide that it's something that has an appeal. But I don't think you're going to find anything in the planet that is even remotely comparable in terms of a real-time phone call, a real-time shout out, a real-time activity on your charts in the old-fashioned way, where there's a guy on a desk getting a phone call from a big player, from a big commercial, and the phone clerk is shouting it in to the floor clerks. So the phone clerk gets the call, the guy shouts it in, and then it gets relayed to the floor trader. Floor trader starts bidding for whatever it is that they're bidding for, and the trade is then done and dusted at whatever price they're looking at. The floor trader has an instruction. Buy it if it drops down. Buy it on the drop. Buy it at the prior swing low. There's an instruction there. They're not getting told buy it on a market order. So when that phone call comes through and this guy is saying to them on the phone, look, I want to get long treasuries. What's the market today? And they come back and say, well, we've got an offer in at 21 just now, so I think we could probably get you 20s on this. That's the phone conversation going on in the trade. I think we can get you 20s. There's a few offers coming in at 21, so I think we're going to be able to get you down into the 20s and let you we'll start buying into that. And the guy's got a choice to make on the other end of the phone. Okay, I like that trade, but I don't want you to miss 21. I need to be long in here. I need to be long for this data release for whatever reason, right? So you can almost imagine the guy on the floor here getting that instruction, try and get some 20s. I want to get 500 or 1,000 contracts at 20. So try and get 20s, but if you can't get 20s, we'll take 21s. So in other words, 20 and a half, 21s is perfectly acceptable for our client. Floor guy bids, tries to get filled at 20, can't get filled, buys some at 20 half, tries to get filled at 20, buys at 20 halves again, and so on and so on. And you can see that buying at lower prices is attempted and obviously executed. And the outcome obviously was superb. I mean, we get 2 spikes to the upside for massive profits on both spikes. And that's a data release. I mean, that you don't have to take the data release trades, but if you didn't take the data release trade, you'd get rid of this one. But obviously you're still validated for this buy trade here anyway. And we get a massive outcome in that one as well. And you can see what's happened on the right-hand edge with that offer. If we'd taken that offer price on the Ultra Bond, you'll see that if we compared the offer price, you can see where the offer would have came in on the Ultra Bond. You can see in there. So there's the prior swing high here, and there's the offer there. So you'd have paid probably 1s or 2s for this trade. And you can see that the low price now has traded down to 28 or thereabouts. 5 or 6 ticks profit, stops at break even, and you're obviously in pretty good shape. You can see that the prop desks were selling this bond at the top edges here at 28.01s. So you got a good solid validation on the Ultra Bond that the short sell was the right trade to be on, just like the prop desks were buying this price down at the bottom edge here as well on the Ultra Bond. Remember, the Ultra Bond does the opposite in terms of the smart money. The smart money is effectively the blue line on the Ultra Bond, and of course it's the pink line on the 10-year Treasury. So that is sensational, I think. And therefore my view counts, and that's it. So I hope that makes a bit of sense, guys. You can see how we've done today on treasuries using the trade log. You can see how the narrative has evolved. You can see how the market's taken this bid offer spread and how the pricing works. And then you can see how the idea of the offers kind of well spaced out and around this pocket of top edges is allowing you to think about still getting short, but being careful with your short selling, being very careful not to overcommit. But we obviously just looked at that short sell there as well from the Ultra Bond side. And that's the current trade log on bonds. There hasn't been anything else particularly crystal clear. We did get one at 14.50 on the fight, and it's still an offer at 14.50. So it's still an offer at 14.50, and obviously you're looking at pressing that offer down into that offer at that stage, because that was that little twist in the marketplace. There's not been anything since then, and you can see that for yourself. We're not making it up. There was the 14.50 trade there on the fight. Equities, 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 oil, equities, 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 equities. There's not been any other bond trade on the trade log since then. So the bond pit has gone quite quiet, and therefore we just acknowledge again that that's what's happened. Makes any sense? Makes a lot of sense, doesn't it? Crazy good trades, crazy outcomes, and it's right in front of you. You just have to keep your screens up to date. You just have to recognize them, think about them, validate them. And if you can validate them, you could potentially trade them.